Well, here we are back in the studio again, Jack. It's good that you've taken the time to spend with us and go through some of these questions for our people because, like I said, we get these questions just pounded on us almost daily, and it's really important that someone with your expertise be here just to lay out the facts for them. So today, I want to talk about life insurance because that's what we deal with people with, and we really focus on how can you make the life insurance cash value, the equity that you have in this product, be more productive for you. So we really advocate using that cash value to finance things where you're losing money by using someone else's money, or whether you lose an opportunity cost by spending your own cash. Now, that can work in a personal situation. There's really, if I loan myself money to buy, my groceries, there's no tax advantage in doing that at all. It's just the velocity of money working for me. But if I loan that business for an investment purpose, isn't there a tax advantage for me of doing that?
Well, there is. But before I even talk about that, let's just talk about the whole concept of the use of the money, period.
Sure.
I mean, and we see this a lot. Sometimes people will want to expand their business. They'll want to buy things for their business. And I'll tell you, certainly after the economic collapse we've had, there's an old saying, the worst time to have to borrow money from a bank is when you need to borrow money from a bank. And so it has been incredibly difficult for people to borrow money. Forget getting mortgages for your house. Business loans are really difficult.
And the Frank Dodd Act just made it like pulling eye teeth to get money.
And I don't care. Listen, the banks pitch us all the time, and I see all the ads. We have money to loan. But the truth is, they ain't loaning the money. And that's the stone cold truth. And so one of the great advantages, I think, of having a whole life policy where you've built up cash is you can get to the cash anytime you want. It's not like you got to go fill out a loan application at the bank and have to go to the underwriter. It's not like you have to go out and try and negotiate the lowest interest rate. It's basically your money. You get it. It's tax-free to use it. And now to get to your question, it turns out that if you do need to borrow the money for business, you actually can claim a tax deduction for the interest on the money that you borrowed. Now again, I would look at that like, the cherry on top of the sundae, so to speak. You have the whole life policy. You build up cash value. You have the ability to borrow the money, and even if you didn't get the tax deduction for the money that you borrowed, it would still be a pretty good deal because when you need money for your business, you need money for your business. Exactly. What are you going to do? And so, so I think even without the tax deduction, I think it's a pretty good system. And the tax deduction makes it better.
Well, I like the way you said it's the cherry on top because this just makes good business sense.
Sure.
If I can go down and the bank is loaning me money and I can get money at 2%, it makes no sense for me to go to the policy and borrow it at 5%.
I agree.
And there's too many people out there that are advocating that. That makes no sense at all to me.
Right.
But if I can't get money, like in this situation where money is very tight, the banks have a ton of it, they're sitting on it, but they're not loaning it.
Of course.
So I can just go to an insurance policy and sign my name and get it. Well, now I can make up for a higher interest rate because I've got capital to put in something that's going to make me money.
Right. I mean, listen, the concept of leverage in real estate has been around forever, but this is no different. If you can borrow money and generate more income than what you're paying to borrow the money, you're going to be ahead, which is no different than the concept in real estate. Same concept applies here. If you need money to have your business expand, or you want to buy a business, or you want to do something that's going to generate a greater rate of return on you than what you're paying in interest to borrow the money, why wouldn't you want to do it?
That's right. Now, there's something else that we should talk about here because this happens frequently. I'll get someone that's worked with some other agent that sold them a policy, and they've developed quite a bit of cash value in it. And they call me, and they're so proud because they borrowed from their life insurance and paid off their house. What did they just do tax-wise to themselves?
Well, they could have lost the tax deduction for the interest on the mortgage to the house.
Yes.
That would be one possibility. But, here's the thing, though, too. I mean, there is sometimes there's at first glance that seems like a pretty boneheaded move to make. But you can make an argument that maybe somehow, let me give you an example, where somehow they want to, that mortgage on the house is hurting their credit, which is maybe stopping them from doing something else. So there could be other underlying reasons why they might want to do that. I agree. It doesn't seem to make much sense, but I could think of some examples where, maybe there could be a reason for doing it, if that makes any sense.
There can be, but just from a tax standpoint, if they're just going to get rid of a mortgage because they want to have their house paid off, it doesn't make much sense to do that.
No, it doesn't. Because, right, I mean, and I know in the past they've talked about changing some of the tax laws on the mortgage interest deduction, but it's still around, and effectively you're paying less interest because if you're in the 33% bracket, for every dollar in interest you pay, you're really only paying 67 cents in interest. So so effectively the government is subsidizing your mortgage by allowing you to deduct the interest. And you're right, if you pay it off with something and now you don't have an interest deduction and now you're paying the loan policy interest, yeah, to me that doesn't make much sense. Agreed.
So if I take money and we do pay our house off, or I pay my personal car off, or I use the money out of the life insurance just to buy groceries, there is no tax advantage for that.
No, there is not.
But what if I own a business now, or I have an investment that I want to make, and I borrow the money from the life insurance, and I make this investment, or I put it into my business?
Okay.
How does the tax work? Does the business not have to pay tax on that money?
Well,
where do I get the tax break?
Well, let me just give you another example. If you were a business and you needed to borrow money for your business and you went to the bank and you borrowed money from the bank and then you paid interest to the bank, I think everybody would agree you get to deduct the interest as a business expense on your corporate return or whatever business you use the money. Effectively, what happens is that the policy is actually serving like the bank. You've used the money for business purposes, except in paying the bank back, you're paying the policy back. But it's what you use the money for that actually determines the deductibility. Okay. And so again, you may want to do this without the benefit of having a tax deduction, but getting a tax deduction is
the cherry on
the sundae.
That's right.
That's right.
So is there any instances where I'm paying this interest back to myself if I loaned it to my business? Is there any situation where I could get in a situation where I'm paying extra tax, like with the Affordable Care Act tax, a 3.8% Medicare tax? What happens if my income, I start getting a lot of interest income from my business, and don't I have to claim that personally?
Well, okay, maybe the answer would be if you have interest income that you get personally, of course, you have to report it as income on your personal return. There's actually a couple rules. I think you may have mentioned one where passive income, depending upon your income, sometimes people have to pay a surtax on passive income. Actually, there's actually an exception for interest that your business pays you. So the truth is you wouldn't have to pay it in that situation.
Okay. Is there any cap on that, or is that unlimited?
That's unlimited.
Okay. So that's some questions that we get a lot, and it's really important for us to have the facts so that we can plan, because one of the next sessions that we want to talk with you about is planning for taxes, because so many people don't, and we're going to do that in the next after a break here, because there are some things that we can do to make tax season a whole lot easier for us, aren't there?
I'm just looking for things to make tax season a lot easier for me. but maybe we'll cover that in another session. But of course, great to be here, Tom, as always.
Yeah, thank you, Jack.
Okay.